attended a really great class today with the Roanoke Valley Association of Realtors, and it had to do with insurance. So I wanted to share some of the information with you. There's two types of markets, just like there is in real estate. There's a buyer's market when carriers want business and there's more competition, meaning the insurance companies. And there's a hard market, which is a seller's market, where there's fewer insurance companies or carriers, higher premiums, very strict underwriting, and tougher inspections and claims history scrutiny. So let's talk about a little bit of that. Part of this reason is because there's roofers that go door to door and they'll say, hey, we noticed you might have some shingles missing. We could file a home insurance claim for you and get a new roof for you paid for free. And a lot of homeowners say, oh, well, that sounds great. What you don't know is that those things do two things. One, it drives up all insurance. And two, then you all of a sudden have a claim history. And a claim history is not something you necessarily want. Claims are for catastrophes. They're not for conveniences and such. And this is a money-making scheme, and not all these roofers are necessarily qualified or good. You know, they're just looking for other business. And there's certainly some very good roofers out there. But a lot of these folks are just looking for business, and it's causing a lot of damage in the industry and damage to you as a homeowner. So why is it important when you have claims? Well, when you have claims and you're going to get insurance, whether you're going to renew it or whether you're moving and going to get new insurance, you have a claim history. And think about it like a credit history. But a claim history is telling the insurance company, hey, I've had some claims, and they'll look and see what that is. And it makes some difference, but a claim is a claim. So if you had 5 claims and they were each a couple $1,000s, or you had one claim and it was several $100,000, still you have a claim history. And when you're going to get insurance, whether you're pricing it for your current home or you're looking to move and you're looking to price other things for a possible home purchase, these things come into play. And they're going to look and say, hey, they've had some claims. They may be more likely to have claims. Now, that's not necessarily the case, but you've got to look at it from the insurance company's standpoint. So having claims is not something you want if you don't have to. Sometimes folks don't understand what should be a claim, and they may call their insurance company or their agent and say, hey, my lawnmower was stolen out of the shed. Somebody might say, okay, let's start a claim process, and then say, oh, well, you know, your deductible is $1,000. It's probably not worth making the claim. Some agents will go ahead and that'll damage your insurability because you started that claim. Some will just simply have a conversation with you and say, well, tell me a little bit about it and let me look and see. Well, it says you have a $1,000 deductible, or you have a $500 deductible, and this was a $250 mower, and give you the pros and cons for doing this. But not everybody's the same. So be very careful with that. Really, if something's inconvenient, if it's a lawnmower stolen or something small, it's often better to just take care of it out of your pocket, or just don't make a claim at all. If you've got a catastrophe, if you got a flood or wind damage or hurricane or hail damage or whatever the case, yes, that's the reason for a claim. But all claims do have an impact, and they stay with you for 5 years. So it's very important to know that. Because there's a lot more catastrophes lately, we hear more of them on the news. It doesn't matter if it's what went on in Asheville or a local hurricane or tornado or something. The more natural disasters we have, that impacts insurance pricing for everybody because they have to look at that.